Kamal and Kapil are partners, having a fixed capital of 5 lakhs. The word to be noted here is fixed capital. Each as on 1st April. Kamal introduced further capital of rupees 1 lakh on 1st January. So here Kamal he had a capital of rupees 5 lakhs from April up to December. Okay, so it's 9 months he had a capital of 5 lakhs, and from 1st January onwards his capital has changed from 5 lakhs to 6 lakhs because he had added 1 lakh more on his in his capital. So now his capital for 3 months, January, February and March, are rupees 6 lakhs. Okay, is rupees 6 lakhs, whereas Kapil withdrew rupees 1 lakh on 1st January. Now for Kapil he had a capital of 5 lakhs for 9 months, and then he has withdrawn rupees 1 lakh. So now after 9 months from January onwards, Kapil's capital becomes 4 lakhs. Okay, for 4 lakhs capital he had for 3 months, January, February and March. Interest on capital is allowed at 10% per annum. The firm earned a net profit of 6 lakhs for the year ended 31st March. Pass journal entries for interest on capital and prepare profit and loss appropriation account. Okay, here we are asked to do two things. One is to pass the journal entries and the other one is to prepare the profit and loss appropriation account. So first, we'll start with our working notes. First we'll see for, there are two partners, one is Kamal and the other one is Kapil. Okay, so capital of Kamal is 5 lakhs. Okay, this 5 lakhs, and for Kapil also, he also had a capital of 5 lakhs for how many months? From April up to December. So how many months are there? 9 months. 9 out of 12 months. Into the interest on interest on capital is allowed at 10%. So it's 10 by 100. So this would be 37,500. So for Kapil also it is the same. He also had 5 lakhs for 9 months, and the interest on capital is allowed at 10%, so 10 by 100. So for Kapil also, for first 9 months his interest on capital is 37,900. This is the interest on capital. Now what happens is on 1st of January, Kamal he had introduced an additional capital of 1 lakh. So now his capital becomes 6 lakhs. Okay, 6 lakhs into for how many months it is? It's from Jan to March. So there are 3 months. 3 by 12. How did we get the 6 lakhs? He already had 5 lakhs as capital, plus he had introduced an additional capital of 1 lakh. This into the rate of interest is 10%. So now his capital would become, the interest would be 15,000 for 3 months. For Kapil, earlier he had, how much did Kapil have? He had 5 lakhs. In this 5 lakhs, he withdrew 1 lakh. So minus 1 lakh. So how much would be his capital as on 1st January? He has 4 lakh rupees. 4 lakhs he had as capital for how many months? For 3 months. So 3 by 12 into 10%. That would give us 10,000. So now we'll total up. When we total up, we get the interest on capital of the two partners. So for this partner, it is 52,500. Kamal, it's 52,500. And for Kapil, it is 47,500. Okay, now our working notes are over. We are asked to pass the journal entries, okay, for interest on capital. So first we'll prepare our journal entry format. we have column for date, particulars, ledger folio, debit and credit. Okay, journal entries, date, particulars, LF, debit in rupees and credit in rupees. Now what will be our journal entry? Where will this interest on capital go? Interest on capital comes in our profit and loss appropriation account. So we'll write our date as 31st March. Okay, our journal entry would be profit and loss appropriation account, debit to. Now in the sum says that the capitals are fixed. Okay, when the capitals are fixed, then the interest on capital will be given in the current accounts. Okay, the interest on capital will go to the current accounts of the partners. So to Kamal's current account, to Kapil's current account. Our narration would be being interest on interest on capital transferred to partners' current accounts. Red accounts. Okay, now we'll fill in the amounts. What is Kamal's current? How much will be? How much interest on capital will go to Kamal's current account? It would be 52,500. We've already prepared our working. Our workings are ready. So for Kamal's interest on capital, the total is 47,500. Now if we total up this 52,500 plus 47,500, we get rupees 1 lakh. This goes to our profit and loss appropriation account. So our journals are over. Now the next thing what we are asked to prepare is profit and loss appropriation account. First, let's prepare the format for profit and loss appropriation account. Debit, credit, the two sides. Now the first particulars, we have to write profit and loss appropriation account for the year ending dash. Okay, whatever is the year. So over here we have particulars, amount, particulars and amount. First is our net profit. Right, by net profit. Our net profit is already given in the question. Net profit is rupees 6 lakhs. Okay, then over here on our debit side, we'll transfer this amount. Okay, to interest on capital who are interest on capital is given to the two partners. Kamal's current account, it does not go to the capital account, it goes to the current account because the capital is fixed. And Kapil's current account, how much is the amount? For Karan it is 52,500 and for Kapil it is 47,500. So our total interest on capital is rupees 1 lakh. Now we don't have any other entry to pass in the sum, so we close the account. Now before closing the account, we need to know how much space is required, so we'll write our next entry as well. To profit transferred to Kamal's current account, and the other one is Kapil's current account. So now we'll close the account. 6 lakhs, we'll write 6 lakhs on either sides. Now since the ratio is not given, okay, the excess amount 6 lakhs minus 1 lakh is 5 lakhs. This is the balance figure, the balancing amount. This 5 lakhs has to be distributed equally between the two partners, Kamal and Kapil. Okay, so each of them gets rupees 2,50,000.